Good morning, everybody. This is Yohay Elam, a Forex Crunch and Market Mover podcast, doing the live market open show for FX Street. Today is Monday. We have a new week, October 19th. I hope everybody had a great weekend, and let's see what's going on in our agenda. We are always, as always, welcome to ask questions in the chat. That's the most important thing. If you don't see it on the screen, under the video, just go to https tlk.io/fxrate-forex-live-video. Of course, as always, we'll talk about recent developments, charts and levels, and the next 24 hours in markets. So the big event for today, let's start with what we had just a few hours ago. Chinese GDP. The world's second largest economy released its GDP figures and other figures for the third quarter. And we had a beat. We had above expectations. So here's the FX rate calendar on Forex Crunch. The most important figure was this one. I mean, the most important one that markets looked at. We're looking for just under 7%, and that's what the Chinese authorities produced. Now, I'm saying using this kind of language because many people doubt that the figures are indeed real or reflect the economy for a few reasons. First of all, it's not exactly a democratic regime over there in China. Secondly, it's released just, in this case, 19 days after the quarter ends and never revised, so there are doubts if this is really accurate. Thirdly, there are other measures like electricity consumption and things like that that not always correlate with the GDP. Okay, so we have 6.9 instead of 7 that we had last month, but this last quarter, sorry, but this is still relatively good data. Now, in other figures, we had a few misses. For example, this urban investment measure rose by only 10.3% year over year for October and less than 10.8%. Industrial output, industrial production rose by 5.7, lower than 6.1 last time, lower than 6. And retail sales, they did beat. We have 10.8 instead of 10.9 instead of 10.8. So all in all, it depends on if you believe the data or not. What we see here is the clear trend of China moving from more industry to more services. That's the famous rebalancing. That's what the Chinese authorities aim for. Okay, so if the data is to be believed, this is good news because the economy is still growing fast and it's shifting into services. For Australia, this isn't really good news because Australia depends on industrial output, on building more houses and building more factories and using more copper and iron. Okay, so for Australia, it wasn't really good news. It was, let's say, it could have been worse, but the Australian dollar is still sort of one of the more vulnerable currency pairs. Let's immediately look at the Aussie. Okay, we do see it rise a bit, but after it fell beforehand, so it's still struggling with the 70 to 80 line, which was the post-Fed high, but more or less in the middle of the range, around 73. Resistance is at 74. Low support is at 72. I have your comment about saying there's no sound. I hope everything you can hear me okay. Yeah, I think maybe Robbie should check your stuff because I think other people do hear what I'm saying. Anyway, quick question from Jack Sorwell. Do you believe the data? I doubt the data. Yeah, I also am not so sure it's exactly correct. I think the Chinese authorities are trying to smooth it out, but at least some analysts say that they did smooth it out also in the good years. That means they reported lower growth in the good years than it really was. So all in all, China is the country with the largest population in the world. I do believe it's the second largest economy. Maybe they're seeing a worse downturn in Q3 that they report now because according to other measures, the slowdown is much more severe in Q2. Okay, in Q3, especially in August, we've seen trade data miss, less imports especially. So in any case, we have the Australian dollar now stabilizing around 73. Could have been worse, as I said. So that was the main event of today. We had on Friday more figures. Eurozone inflation came out as expected. They were the final numbers for the month of September. Year-over-year deflation 0.1 and core inflation at 0.9. Oh, deflation at 0.1, sorry. And industrial output was a bit of a miss. The last figure for Friday was the most important figure was the U.S. consumer confidence figure. That came out a bit above expectations at 92 points. Let's see if I can see it here. No. Anyway, on the other hand, JOLTS came out a bit of a miss. So it was a mixed close, but all in all, for instance, for euro-dollar, we've seen it close off the highs. Remember, I think it was Thursday. So here we have what we had last week. So we had euro-dollar climbing, even breaking this critical 114.60 level was a critical line in September and in May, and 1,000 pips off the lows. But as it always happens, not always, but as it often happens with euro-dollar, we had a false break, almost reached 115, and then came Novotny of the Central Bank of Austria. He said that more action is needed. He then corrected, or his words were corrected by news agencies. He meant more action needed in the fiscal field, less in monetary, but it was enough to push the euro down. So euro-dollar fell to this line of support, 113.40. It's still sort of hovering around this level. We're currently at 113.60. If you can see here, we see our sort of if you want, head and shoulders. Okay. To your question, Pitman, first of all, you're welcome. Yes, we're live. It's a new format. Your questions are welcome. So we have this head and shoulders more or less pattern. 113.40 is the bottom, is the shoulder line, and then we have the head there almost at 115. And let's see where it goes from here. This is technically speaking, we don't have any European events today of significance, but we, of course, later this week, we have the Draghi show. Mario Draghi, president of the ECB, he'll be speaking at the press conference of the rate decision on Thursday. So that's really the big event of the week. We'll talk about that more in detail. Let's see if we have any what events await us today, and then we'll look at the charts. So not many things today. We have attended the Bundesbank monthly report from the German Central Bank. So we have from Jens Weidmann and his team will report about the German economy, inflation, employment forecasts. What's most interesting for me to see, it'll be just under 2 hours, is if they talk about the Volkswagen crisis, this emission scandal in VW, if they assess how much it can impact the German economy. We know it'll have a significant impact, but we don't know how much, and we'll hear from the wise men of the Bundesbank. At 2 GMT, we have FOMC's Lyle Brainard speaking. She didn't speak that often in the past, but last week when she talked and she was very dovish, she certainly had an impact. So we'll be watching her at 2 GMT. She's a dove. And at 4 GMT, we have Jeffrey Lacker. Sorry, that's a mistake here in the name. Jeffrey Lacker, the only member of the FOMC that voted for a rate hike in September. He's going to speak later on, and he's usually hawkish. Let's see if he has doubts following the retail sales. So let's see if Brainard repeats her dovish stance, it'll be no news. But if she says something a bit more hawkish about, let's say, more encouraged by inflation, it'll be good news. And if we'll have something from Lacker, if he says again we need to raise the rates, okay, that's not news. But if he says something like I have doubts because of retail sales, that's news. Okay, and today also in Canada, I find it hard to believe that some Canadians are awake at this hour. It's nighttime in Canada, but we have elections there today. It's a close race between the current Prime Minister Stephen Harper and, if I'm not mistaken, Trudeau. But Canada is a very stable democracy, and the big parties are not that apart from each other, so I don't think it'll have a material impact on the Canadian dollar. As always, markets want to see certainty. That means a clear victory for either party or parties there, and they don't want to see a hung parliament and without a government, resulting with no government and difficulty making decisions. Okay, so we want, so it'll be better for the Canadian dollar to have a decisive result rather than a hung parliament, but most chances are we'll have a new government very shortly. So this should be a non-event for the Canadian dollar, but it's something to watch as well. Okay, let's talk about charts, and of course, your questions are always welcome. So let's begin again with euro dollar. We're seeing this head and shoulders pattern hovering above 113.40. 114 is also a line to watch, and then 114.60 and 115. On the downside, we have 112.90 and 112.15. Okay, these are the levels I'm watching. Currently, this week we have so far a very stable open. Pound dollar, the pound is gaining now against the US dollar, rising to 154.75, still below 155 that we've seen last week, but significant level as well. The highs of last week just above 155 are resistance. 154.13, which was the low after the big rise, is support, and currently we have also on the downside a bit 153.80 and then 153.25. Okay, so let's move on to dollar yen. Dollar yen, for change, after hugging the 120 level for so long, it finally made a move out of range, reached the low of 118.10, but now we're seeing it showing more love to 120, creeping higher toward this line. We've reached 119.60 so far today, and now we're back down to 119.30. There's a trend of some dollar selling this morning, nothing too extreme. Let's see, all eyes are on the Bank of Japan's decision on October 30th. Let's talk a bit about that more in detail, because we have a bit of news around that. So we had over the weekend some news from Japan. We had two things happening. First of all, the finance minister, Taro Aso, he said that he doesn't see BOJ action as likely. Okay, so yeah, he's trying to influence. Yeah, the Bank of Japan is officially more independent. In practice, it's sort of the government does have quite a lot of impact on the central bank. So I'm not sure. So we might expect perhaps no action from the Bank of Japan. And in this case, Japanese yen could strengthen. Okay. Another thing that I've read over the weekend, at least coming from good friends at Forex Live, is that there's a new inflation measure, a daily inflation measure that uses online figures called U-Tokyo, and it shows an acceleration in inflation year over year, 1.4%, but a general trend higher in the past few months. So it's not the official figure. We have to take it with a grain of salt, as always, but at the moment, I see that there's a bit of a lower chance for action from the Bank of Japan. No new QE means a stronger yen. And if we have new QE, like we had it in October last month, then of course the yen will fall. Last year, we had a combined action of the Bank of Japan and the government over there, and that really killed the yen. It sent it above 111 and opened the road until 120 and later 125. Another thing to watch, why is this decision important? That's because we have the semi-annual outlook from the Bank of Japan released towards this rate decision. Okay, let's go back to the charts and move on to dollar CAD. So we're waiting the elections. We had some really nice moves on dollar CAD. This 11-year high of 134.60, a fall to double bottom, short-lived double bottom here of 129, another rise to 130.70, and another fall here to 128.25, and now another struggle with the 129 level. The big event this week is the decision of the Bank of Canada, rate decision. No changes expected, and it'll be interesting to hear how they see the economy. We'll talk about that on Wednesday. We'll talk about that more in detail when we reach that event. Aussie dollar, we talked about that at the beginning, and relatively higher range to what we've seen, in late September when we had this double bottom here of 69.35. We reached all the way almost 74. The wider range is 72 to 74. Okay, New Zealand dollar, quite a nice ride. Reached resistance that we talked about at 69, currently 68.12. Still struggling with the round number of 68, but that's not an important line. 67.40, which was the previous peak here last week, is what I see as support, 69 as resistance. Okay, let's talk about dollar Swiss. It fell quite a lot, fell below this support line here of 95.25 and reached a new low. Let's add another line here to the chart right here at 94.73. But let's see how it works its way out with the 75 level. Euro Swiss also moved a bit out of range. The Swiss franc strengthened against the euro. It had a very narrow range here, around between 109.40 and 108.70. So we've seen it fall all the way to 107.80. Now we're back, sort of back to the range. Remember, the Swiss National Bank frequently intervenes in markets, so I would stay away. Anyway, pound dollar, we've seen quite a few moves here, maybe not pound dollar, euro pound. Also, well, we could say maybe a double head and shoulders pattern here. We have shoulder line here, where we are now. Let's shift the lines a bit. This is one shoulder line, but this can also be seen as a shoulder line right here. And we fell below it, and this is, of course, the big head. We almost touched 75 on euro pound. Now we're back to 73.40. Support at 73, the round number, much further below 72. And so this is the big range, 73.40 to 75, and below we have 72. Good morning, Albert. Yeah, sorry for being late. No worries, we're here, and everybody is welcome to ask questions, and we'll try to answer them. Let's talk about a few more currency pairs. Euro yen, 135.50. Also here, the euro rose higher, 137.30, and back down to the range. Currently, it's struggling with the higher end of the range. 134.20 support, 137.50 is resistance. This is a pair of safe haven currencies, so it doesn't move too much. But a pair that does move a lot is is a pound yen, the dragon. I think it's beginning to see some resistance forming right here. That's 184.82, just under 185. We've seen it formed here, and then we've seen the pair a bit below. I wouldn't call it higher lows, lower highs at this point, but actually I see this as important resistance. And we have, a lot depends, of course, on the Bank of Japan later this month, if we'll see action or not. Anyway, if we have bad global news, this is good. If we have bad global news, it's bad for the pair, because then money flows into the yen and outside other currencies. So the yen will strengthen. That means this pair goes down. If we have good news, it's good for the pound and no need for the safe haven yen. So we see the pair going up. So this is sort of the general psyche of this currency pair. We had, let's say, you had asked questions about gold last week. So gold is off the boiler, if you wish. It didn't manage to reach 1200. Now we're seeing it back exactly at support. We've seen this 111.70. This is support, was because it was resistance twice, if I'm not mistaken. Yeah, okay, no, it has been support here back in May, and then resistance here in August, okay? And now we've seen a break above this line, above 111.70, and the pair reached 1190, and now we're back down to 1173. Let's see, further support is at 1156 and 1142. Okay, so let's see what's ahead of us later this week. And of course, your questions are, as always, very, very welcome. Just before we have the RBA, speaking of Australia, we have the RBA meeting minutes later, late today. We'll talk about the result of this tomorrow morning in the show for tomorrow. These are the minutes from the October meeting. It will be interesting to see one specific thing there for those of you trading the Australian dollar. We know that Westpac, one of Australia's biggest banks, decided to raise the mortgage rates. That's because of new regulation. And many analysts in Australia speculate that because of this move, it gives room for the RBA to cut their rates. Okay, so let's see if in the meeting minutes, the RBA, the members, Glenn Stevens and his colleagues, discussed the fortunes of the meaning of this regulatory change, and this could serve as a hint as if we'll get a rate cut. If they just talk about the economy, and it's mostly things we know, this is usually a non-event. But if they do speak about this move, it could serve as a hint if they're going to cut rates in November or not. So that's the most important thing to watch out for. Okay. And later this week, bigger events than this one. Big events for today, we talked about them: Chinese GDP and industrial output. They came out mixed. Better GDP, lower industrial output. The Chinese government is trying to show that it's shifting away from industry to services. Many people doubt that. Australian dollar is still a bit depressed. Jeffrey Lacker talks later today. We talked about that. Tomorrow we have housing data in the United States, release of building permits and housing starts. Sometimes the data goes, one figure goes one way and the other goes the other way, so it can be very confusing. But more importantly, we have Bill Dudley of the New York Fed, a permanent voter on the FOMC, speak. Let's see if he's more dovish or more hawkish towards the December decision. We have a decision also this month in October, but the chances for action are low. And then things really warm up. On Wednesday, we have Canada's rate decision. Let's see how they see the economy. On Thursday, for those of you trading the pound, UK retail sales, and of course the ECB rate decision. The big question there is, will they hint about action in December or not, and what kind of action? And there are two kinds of action. One is just telling markets, okay, we'll keep on printing money as long as needed, or until 2017, 2018, instead of currently until September 2016, or they can announce an immediate raise in the amount of bonds they buy from 60 billion per month, 60 billion euros, to 80 billion or 100 billion. Okay, so I hope we will get a hint about that, if they intend to act or not. Inflation is clearly missing the target, and if the Fed is not really keen on raising rates, it weighs on the it pushes euro dollar higher, makes the euro stronger, and that's not good for the ECB. Good morning, Vedran. I see a question, what to expect from the ECB. Okay, let me provide perhaps a bit more details. So last week we had Evald Novotny say that clearly they're missing their targets and more instruments are needed, but something there was lost in translation. He talked more about fiscal policy. It wasn't exactly what he said. Anyway, the jury is still out. What we know is that the ECB really doesn't like a strong euro. Why is that? Because that makes exports less attractive. If Germany wants to export Audi, Volkswagen, BMW, for example, and it costs more than an American consumer or Chinese consumer in the UK will not buy it. And the second thing is the ECB's mandate, inflation. So if you import lots of stuff from outside and it becomes cheaper, well, in theory it's good, but For the ECB, it's bad because we're currently in deflation and it wants a lower, a higher level of inflation, not around zero. Because it's important to remember, even without energy prices, core inflation is only 0.9. And the mandate is about headline inflation. And we're almost coming full circle to the big OPEC decision that came last year in November. That was the big hit for oil prices. So the ECB looks at year-over-year numbers. So you can still blame oil prices now, you can still blame them next month, but come December, you can't use the excuse of falling oil prices anymore because it's already reflecting lower oil prices 1 year beforehand. So in any case, currently euro-dollar is still in some kind of range. They would like to see it lower, at least they would not like to see it rise. So the big question, will they act or not? The ECB usually tries, and other central banks as well, they usually try to do things to make things happen without really acting, just do verbal intervention if you wish. So they might just hint that they're ready to act without a pre-commitment, sort of wink wink to the markets, trying to push the euro down, and hopefully not having to really act in December. But they might also, because there's opposition in the ECB, they might also say things will get better by their own, no need for action now, and that could, of course, mean no action and a stronger euro. So that's sort of the ECB preview in a bit more detail, but of course on Thursday we'll dive into it much more. Okay, let's get back to what I've prepared for you. Yeah, on Friday we also have Eurozone PMIs. It's forward-looking, it's for October, but this time it's a bit overshadowed by the ECB. So I believe that expectations for the ECB will dominate the scene, and then we'll have reaction to the ECB regarding the euro. So these figures, which are always important, will not be important this time. Good morning, Pan. Pan asks, hi, Yohay, any way of knowing whether it's a risk off or risk on this week, trying to get a handle on the yen pairs? Well, I don't know, it depends on the data. Currently, everything began very stable. I would say risk on, because it's, well, if dollar yen is rising at the moment, or at least not falling, you can't call it risk off environment because we've seen much lower levels. So that's just the open of the week, because Chinese data was better than expected, even if you don't believe it. And so the atmosphere is relatively calm at the moment. But we might hear more from Fed officials, from Chinese officials. There's so much trouble in the world that things can change quite fast, okay? So talked about the big risk that could change the atmosphere in markets. I would say, Fed speakers maybe today, but I also saw this morning on Bloomberg TV, they featured news that Saudi Arabia is delaying its payments to people working for the government, to contractors. That means that there is some liquidity problems in Saudi Arabia because of falling oil prices. That's quite strange because they made so much money in the good years. Anyway, it's also some kind of risk factor to keep in the back of our minds, because instability in the Middle East is always risk. At the moment, it's risk on. Everything looks okay, but we'll have to hear as the week develops. ECB decision is the main event. More questions? I'll just mention once again something I mentioned on Friday. I had the privilege, thanks to the guys from FX Street, to attend here a conference held by ex-finance minister of Greece, Yanis Varoufakis. Very interesting person, has many interesting ideas for democratizing the Eurozone and also solving some economic problems. I wonder, he's continuing his tour around Europe. I wonder if he'll manage to have some impact. As we said, Greece is always a problem, and it's always currently on the back burner. But next month, I think Greece will return to the headlines, because we have still lots of trouble brewing the first review, will it be okay or not? And then we have the topic of debt going on over there. So anyway, it's quite interesting for me, at least, to watch what's going on. Currently, it doesn't have an impact on the euro, but always something to keep in the back of our minds of international developments. Another thing in international developments, we have an ongoing debate in the UK. Should I stay or should I go regarding the EU? The UK, there's going to be a referendum. Now the questions are remain, or the answers are remain or leave, not yes, no. It's the polls show it's quite split. That's a risk factor for the pound. The business community wants the UK to stay in the Eurozone because of the access to the single market. But there are so many factors. There's lots of politics on both sides, so it's another risk factor for the pound. That's regarding risk factors. Any questions that you may have? Let's see what's going on the charts. It's the daily chart of euro dollar. Let's move to the hourly chart. Yeah. So euro dollar is interesting also technically. A question from Jax Wild. Maybe he's wondering about Europe burning money. Yeah. Bumming money. Sorry. Yeah, well, at least his tours around Europe create some kind of economic activity. There were 1,300 people coming to see him in Barcelona, inside the conference room. I guess around the same amount outside in the same building, just watching his talk on a big screen. And many people were left outside, including some of my friends. So he certainly raised his interest. The Spanish press here in Catalonia, the Catalan press, was very interesting with what he had to say. They think the same happened in Portugal, where he's been afterwards, and next week he'll be in the UK once again. He's been to Berlin. So at least people are... the event was free of charge, at least here in Barcelona, and I believe it'll be... but people spend money when going out to see him. Anyway, it'll be interesting to see the developments in the Eurozone in the next few years. It's clear to see that the crisis is not over, the political crisis, the economic crisis, the debt crisis, the bank crisis. So it's also something to watch. We have elections here in Spain on December 20th, and there's a chance this time 4 parties will have significant stakes in parliament. It's not going to be the same government again, most probably. So these are interesting times also for Spain. And Spain is the Eurozone's 4th largest economy. So it can take a different direction. So far, the Spanish government has obeyed everything that it received from Brussels. You may criticize it for that or praise it, but that's what's going on. And maybe we'll have some kind of change with the next government, maybe not. More questions about charts, about events. I have a clear separation of ranges here at 154 in pound dollar. It's yeah, I think 154 is it's a better line than the one I had here before. You can see the pair either traded under this line or above this line. Let's Aussie dollar still around 73. Do you see here an uptrend or downtrend or maybe a triangle? No? Let's try to draw it on the chart. We have some kind of trend line here, right? And on the other side, this one looks nice, no? The uptrend support. At least through my eyes, it looks not so good. Just a second. I don't know how many of you are interested in in charts and how many in fundamentals. That's part of the feedback we're trying to receive here, to get to know what you guys want, what you guys are looking for. Anyway, this is an attempt to draw some lines here on Aussie dollar, trading in some kind of wedge, triangle, pendant, whatever you call it. Which way it will explode to. Usually these things tend to explode. We have narrow ranges. In dollar yen, we've seen this narrow triangle explode to the downside, but we're seeing dollar yen getting back to range. So that's what's going on there. Aussie dollar, we'll use these charts also tomorrow. Do you guys see the euro dollar falling below this kind of this line, or actually rising from here? Well, I think a lot depends on the ECB. Let's take a look. Well, we talked about the events this week, but also next week we have big events. It's 2 central bank decisions, one from the Fed, one from the Bank of Japan, Wednesday and Friday. Both are not expected to change policy. The less interesting one this time is the Fed, because we're expecting a move in December, but they could shape expectations for December. So what you're looking at now is the CME's group countdown to the FOMC, the implied probability of a move. 9 days and 3 hours left. They make this nice countdown. So for October, bond markets are expecting, according to this implied probability, 95% of no change. In December, that's already 60, almost 70% no change. January, no change. And March, marginally. In March, we have a press conference as well, expecting a rate hike, because only 48% are against change. And so we have 52 for higher rates. Okay, it was already only for rate hike in April, but there's no press conference there. And a lot depends on the comments we'll hear today from Jeffrey Lacker and from Lal Brainard. Okay, so that's October 28th. And on October 30th, as aforementioned, the Bank of Japan. Here it's an open game. It's more interesting because there are high expectations. I think this is if dollar yen doesn't explode beforehand because of big hints, then this will be the chance to see a breakout to the upside, to the downside. Currently, it looks to the downside because of the Bank of Japan, the finance minister of Japan saying BOJ action is unlikely, but you never know. There's so many things going on in markets, so many things going on behind closed doors, that it can really go both ways. Okay. See if we have more questions before the wrap. Yeah, we talked about the ECB, we talked about the Fed, talked about Chinese GDP, even talked about Yanis Varoufakis, and ECB remains in focus, of course. That's, of course, the big tension later this week. And anyway, if you don't see the chat, I'm saying it every morning, but I hope it'll be resolved. Just go to this address, tlk.io/fxstreet-live-forex, forex-live-video. The address here you see on the screen. And ask your questions. Tomorrow we have more events and markets. So far, a quiet open for today, despite the big release from China. Let's see if euro dollar falls below this level or bounces higher. Okay. So, with no further questions, let's move. Let's wrap up. So this is the wrap up of the live market open for Monday, October 19th. We had Chinese GDP released earlier. It came out at the Goldilocks level of 6.9, just a bit above expectations, just below last time. We had with it a few other releases. We had better retail sales, which means more internal consumption, and weaker industrial production. All this is exactly, I think, what the Chinese government wants to show us: a rebalancing, less industry, more services, more internal consumption. Australian dollar liked it because it was a bit above expectations, but many people, of course, doubt the levels currently. Australian dollar is trading in a triangle, in a wedge at 73. It's a narrowing range. The wide range is 72 to 74. Now we have today the Bundesbank monthly report. Watch out for what they say about VW, about the crisis, how much this emission scandal could impact the German economy. We have then at 2 GMT, Lyle Brainard of the FOMC speaking. She's been very dovish in her previous talk. Let's see if she repeats that. And Jeffrey Lacker, which has been very hawkish, voting for a rate hike. Let's see if he sticks to that or not. And we have also elections in Canada. Probably a low-risk event. Probably we'll have a new government. I don't know who, but we'll have stability and certainty, which is good for the loonie, and it's priced into the markets. If we have something really messy, then it's bad for the loonie, but most probably things will be okay. And at night, half past midnight GMT, the RBA meeting minutes. Let's see if they talk about the Westpac mortgage rate hike, and if it hints about a rate cut, in Australia or not. Okay, looking at the charts, we have euro dollar at this wide shoulder, head and shoulders pattern. 113.40 is the level to watch. On the top side, 114.60, 115. On the downside, 112.90 and 112.15. Pound dollar close to the highs, but still no cigar. Very clear separator of ranges here at 154. Dollar yen grinding back up towards 120 after the big fall last week to 118.10. Dollar CAD, above the lows, 129.10. 129 remains a separator. Aussie dollar we talked about, and New Zealand dollar here at 68.10, under the highs of resistance at 69 and above support at 67.40. This is an important week that begins a bit sort of slow. We have later this week, important to note, Chinese GDP we had today, and Tuesday housing data from the US and Bill Dudley talks. And then it gets even busier with a rate decision in Canada on Wednesday, Thursday retail sales, and Thursday, of course, the ECB rate decision, which is set to dominate the headlines, the attention, the expectations, and of course, the outcome of this meeting will echo for quite some time. So thank you everybody for joining the show today. You're welcome to provide us with some feedback. Tell us what you think about the show, what things you'd like to see here, more technical analysis, more fundamental analysis, and of course, as always, your questions are more than welcome. That's the main goal of the show, to provide you with the information to answer questions. So thank you very much, everybody, for coming. As usual, we'll be here tomorrow at 8 GMT. That's 9 in London or 10 in the old continent for the market open, as usual. So I wish everybody a safe trading day, a successful one, and I hope to see you tomorrow right here. So thank you and goodbye.